In this video, guys, look at possible signs that the market's about to reverse. Stay tuned. Hey guys, warm welcome to you. All right, so if you're day trading the indices, whether the DAX, FTSE, Dow, S&P 500, NASDAQ, whatever you're trading, very often we get a move to highs or lows. In this case, we're going to stick to an example of lows. And we've kind of got a feeling that there's a bullish overall sentiment to the market. You maybe got a daily uptrend, whatever the case may be. And so you're trying to find a nice level to buy intraday for a low bounce from low to possibly high, maybe back to a mean. We'll look at a mean in a moment, maybe just a kind of little pop up, but you want to see the nuances. Now, one nice way to do it is to wait for a low, a test through the low, and then comes back up. That's kind of a classical thing we get very, very often at the moment in bull markets. In those intraday lows form, they retrace up and then they come back and test again. But what about if it doesn't retest that low? How can we kind of fine-tune that entry to give us the best possible risk-reward ratio and the likelihood of success? Okay, so what I'm going to do, guys, is I'm going to look at an example from the DAX. Now, there was a very similar example the other day, actually, that I was trading on the Dow. So this similarity is happening, or this kind of pattern is happening throughout all different types of markets. So it's worth looking at if you're an intraday trader. Let's hit the screens. All right, guys, so got DAX in front of us here. And just for context, we kind of had this little downdraft here. It was based on, let's get rid of this. It's based on some algo movement based on US headlines related to the China US trade war meetings, etc. Whatever. The point is, you get this drive lower, and it's the same across US stocks as well, but they weren't open, so it's a pre-market futures, a Globex session. But we've had this a lot in regular trading hours, outside of trading hours. This kind of move lower, and it's not necessarily the spike lower that's more interesting. It's what we see here that gives us clues that it's worth a go at a reversal. And like I said, something similar the other day, very, very similar type of move, push to lows, and then did a few different things that said, okay, now's the time to have a go at it. Do they always work? No, but often they set up a decent risk-reward ratio, a decent kind of probability of success. So we can tick the box that we're in a reasonably bullish environment, right? This is the DAX daily, pushing up, hugging the 5-period moving average, pushing to highs. Yes, we've kind of put a tail in here. Yes, we've put it's running out of steam a little bit, but ultimately it's not like we're falling through the floor here and we're trying to pick a bottom there, because that wouldn't be very sensible at all in this condition anyway. Right, so we have some things to look at. Is how many pullbacks or pauses we get until the low. Now, generally speaking, this is broad. We look for 3. So we've got 1, 2, and we've got a prolonged third bear flag-ish here. Now, this isn't really a flag as such. A flag's more tight and then goes. This is kind of a consolidation and acceptance of this low. So, but it shows you that sellers are perhaps running out of steam. We've got some down moves here. Every down move we have, let's clear that back off again. Every down move we kind of have a decent volume push. And then we kind of sit here and do not a lot, and the volume starts to die down. So we start to see the volume dying down. Now it starts to pick up again as we push lower and through. Now this candle here, you could be forgiven in thinking that's the low. And very often I'll take this kind of exhaustion and we'll get stopped out very quickly if it fails. But very often that actual exhaustion works nicely, especially as it's gone through your kind of low. You can take it for a pop back up and then you can decide how to manage it. So that's one thing. In this case, you would have been stopped on that. However, if you want to still look and say, well, listen, is this going to fall through the floor or not? Out of nowhere, we get a reversal. Now, this looks hard to pinpoint to me. You don't have the big volume bar. You don't have the big ATR move. You don't have much that says this is a low. And it starts to put in a decent move. Now, the first indication that potentially the supply-demand imbalance has changed is the number of green bars. 1 minute chart here, 1, 2, 3, 4, 5, 6 minutes, pushing back up to our prior low. Now, this is where we go, all right, we've seen some strength. And also, looking at this, guys, this here is the biggest move you've had onto the upside out since we kind of fell to the bottom. So again, some signs of strength, and there's still lots of meat in this trade, because what you can start to do is you can say, right, this is my volume weighted average price. Are we going to go back to our level before we hit? Are we going to retrace to 50% of the move, which again is a nice kind of angle? 50% is about here. Are we going to go back to the VWAP? All these kind of options and targets for a mean reversion type trade. So again, we have not pulled the trigger yet. We might pull the trigger here and been stopped out, but we're waiting. We want to see what happens after this. If it starts to revisit, then obviously we don't want to get involved in it. Maybe we then look for a low break here, it's under here and back up. That would set up a nice trade, but no, we haven't got that yet. So now we're saying, okay, we're in buying mode. Where do we start to buy now? Admittedly, this is a slightly slower than you'd like mover. You know, when we have big extreme moves, this is kind of compressed into much more of a shorter time frame and easier to read. However, when you start to see this, so you start to kind of quantify things a bit and go, right, this is a big move. The pullback hasn't really done much. You know, we can do this, we can say, right, we've not even pulled back 50% of that move and it's taken quite a while. So we can now frame the trade and say, right, we are now going to use this and we're going to take a buy as we push up, or as we kind of, you know, really see this little mini momentum, mini kind of stalling here. Specifically when you look and say, well, this was the prior low, right? This was the prior low. Yes, a few ticks, but you know, we're talking a few ticks literally here, and it's holding at the prior low. So, you know, if that's the level, if that's now a support, we dip through, we've come back up, we've held. As we start to trade around this and we start to find a bit of a bid, that's not a bad place to take our long. Now, we can either then use our stop under this low here, or we can use our stop under the ultimate low here. Now, either way is okay. Your risk is if you do it too tight, you get a little bit of a ping out on a wick, which is actually a very good place to take the trade. So maybe it's having a stop under the low and looking. This is what I like to do. I like to have a kind of broader stop as initial. That's it. No line in the stand stop. And then I like to say, okay, but ultimately I don't really want to see it below here, right? If I've taken this long here, assuming I've taken a little long as we pop back up, or the breakout kind of the trend line here, or whatever the scenario may be, assuming all these things, 1, 2, 3, push up, pull back, line, etc. And I'm looking for a mean reversion back to the VWAP or to a high. You know, I'm going to say, hey, this is my worst case scenario stop. However, I don't really want to see it doing anything down here. It could still do it and kind of double bottom, but if I'm reading that little candlesticks there as momentum, I don't really want to see it go down there. I'm wrong on momentum. I could still be right on the trade, so I would give it a little bit of room. I would say, okay, I don't necessarily want to just come out straight away here, but if I don't like the price action in this zone, then I had the flexibility to close the trade. If it goes to here, then it's just there's no questions asked, it's out of the trade completely. So that's a way of managing the position. And of course, you push up, more than likely, this is going to be your exit, guys. You may well hold for VWAP, of course, if you've left it, and that's the way your exit is. But this price spike, this volume spike, indicates that, okay, that might well be it, and it's 50% of the move. You'd at least be scaling some off into it, or you'd at least be tightening up the stop at least and saying, okay, you know, my stop's under that low there now, let's see where it can go, and then coming out the VWAP. Or, you know, if you're looking for a kind of trailer, again, tightening up the stops under lows, maybe you were taken out on here, etc. But anyway, the point, guys, without going down too many rabbit holes here, is looking for, you know, some signals that we're reversing. And the signals of this are, we've had multiple pullbacks or pauses. We've had a good drive up off the low. That's the longest drive since the drive lower, indicating the supply demand could have shifted. We find some support then at a prior support, and then we've got our choice of, okay, now's our time to pull the trigger. We've not pulled it too early. We've got a reasonable place to put the stop. It's quite quiet, but we could just chug back up. Another thing as well, guys, is that quiet for longs anyway, it works in your favor, because it, generally speaking, quiet tends to, and it's a generalization, tends to fall back to the theme of the higher time frames. The higher time frame is pushing up. If we're quiet, generally the quietness helps the higher time frame, which chug, chug, chug. If it's highly volatile, there's lots of volume, then again, we could be pushing through lows. So just some thoughts, guys, on how to look at an intraday chart and look at maybe some of the little signs of where potentially you can see that the thing is changing, where you can frame the risk, and also that little trick that I like to use of, okay, no, I'll understand not going below this, that's out, but also don't want it to go below that, and we'll see how it behaves there. So we're not automatically coming out, but if it comes out and pushes back up, that's fine. I might even add some more news and leverage on that as that wick as a stop. Or if it comes back up and holds and kind of grinds, you know, maybe you ditch it and say, well, you know, maybe I prefer to see a flush to lows, a pullback, etc. So, you know, it's very dynamic the way you trade this kind of stuff. Obviously, you're lining yourself in with your thesis on your higher time frames. Your higher time frames got to be in line with that and say, hey, I want to be buying a low because of this, this, and this. You're looking for some signals that it's running out of steam a little bit, like we said, and then you're trying to find a place to express the trade without having the stop loss too wide, and without being too late. You don't want to be too late to it. If you're too late, this trade doesn't work because you've got a wide stop and it could easily come down and still be. So you want to be early, but not so early that you're just guessing at it. Like I guessed that earlier. Earlier that little exhaustion would have pinged you out, of course. But then after you've seen some strength, you want to see that strength hold. All right, guys, that is intraday trading. Trying to find the little nuances and clues that a bottom might be about to occur. Whatever you do, keep risk managed, and I'll see you in the next one. Bye-bye.